Welcome to High Profits, the financial blueprint for cannabis dispensaries. It's the podcast for dispensary owners who want to increase their cash flow, achieve their financial goals, and realize the vision that they set out when they started the company. Take control of your finances instead of allowing your finances to take control of you. Learn to be more proactive, less reactive, and blaze a trail to long-term success. I'm your host, Kenny Mason, CEO of Equibis Accounting, the premier cannabis accounting and business advisory firm. Get ready to light up your financial future. What's up, my fellow cannabis entrepreneurs? Did you know that even with cannabis being a $30 billion and growing industry, that only 31% of dispensary owners are profitable? Well, on this podcast, we'll discuss some critical tools and strategies that dispensary owners should be using to get on that path to profitability. We've heard all the financial gurus talk about budgeting, and deep down, you likely know that you should be budgeting. And here's the secret. These successful dispensaries are effectively using some form of budgeting, but obviously there's no real secret. But there's a problem that many operators are facing. They know they should be doing a better job controlling how they spend their money, and they aren't. Usually, this road leads to poor cash management, which is the number one reason that businesses fail. So why is budgeting so important to overcoming business failure? Running a dispensary is challenging, and oftentimes you get so wrapped up with the day-to-day that you rarely take the time to sit down and actually look at where the money is going each and every month. You don't know if you spend more on product or on marketing than you realistically have the cash for. Insert you using the money you should be stashing away for sales taxes that you now owe the state. So I want to make a case for those who know that they should be using the budget but aren't quite convinced yet that they need to begin budgeting now. And then I will dive a bit deeper into the actual process you can use to start building out a budget now that actually helps you better run your business. So here are 3 reasons you should be budgeting. Budgeting keeps you from mindlessly spending or overspending. You want to know if you have the money to spare for unforeseen or unplanned emergency cost or non-emergency cost. Well, when you have a budget, you can check that category or type of cost and to see if you have the room, the flexibility to pay for those mainly non-emergency type costs. Budgeting will hold you and your team accountable if you, in fact, do find yourself overspending each month. The budget reality checks you and essentially, in theory, asks you, where are you doing the overspending? Is there a good reason for the overspending? By how much? How should you go about fixing this so you don't continue to run into this issue going forward? Similar to the last point, budgeting helps you become more alert, or that it in of itself alerts you to are prices increasing. By prices, I mean the cost to obtain the product, whether that's flour, whether that's vapes and oils. Pricing fluctuates throughout the years. And so budgeting allows you to see, wait, 'cause I wasn't expecting these types of increases or cost increases. And so the budget alerts you to that because you find yourself again overspending. So how do you create a good, usable, effective budget? First, identify all your areas of expenses or types of costs. Usually it's good at this point to have some type of accounting already set in place because then you can look at your categories, your chart of accounts that you are already using to track your spending. Next, you want to create a sales forecast, even if it's a simple projection of your sales for the upcoming year or whatever period you're going to be budgeting for. Realistically, you can't spend money that you don't have. So it's best to develop this forecast so that this can be your starting point for your budget. A caveat, though, is for those who are truly startups who maybe have the capital or the financial backing already to be able to spend without thinking about how much sales they have coming in the door right now. Or if you're in general just well capitalized or financed, even if you're beyond the startup mode. Your next step gives you a bit of wiggle room in terms of how you want to go about putting the hard numbers to each cost or expense area. One method is to look at your previous year's financials to look to see what percentage of your revenue last year went to each cost. Then you can use those same percentages for this year with your new sales projections. For example, if we spent last year, we spent 30% of our revenue on the cost of flour and 10% of our revenue, say on the cost of vapes and oils from our manufacturers, then you could use those same percentages for the current year with your current sales projections. Other methods include doing a deep dive research of each cost area. So you're going in and looking at each specific area, trying to figure out where costs are going to be for the current year. and using that information to help form your decisions on what cost you're going to incur or how much you're going to be spending in each area. On the flip side, you could take a faster, although usually less accurate approach and just using last year's numbers. It's quick. You already have those numbers. Look at those, determine what you're going to spend this year based off that, maybe make some minor tweaks or so. But if you want to come up with a budget ASAP as quickly as possible, that's at least a good starting point. And maybe adjust based off of what you expect to sell. Usually your costs are going to be based off of, or excuse me, your cost of goods sold, which is your product purchasing, is going to be based off of what you actually sell. And then next, review your bottom line number. So all of this is great, but if you finish your budget, you have your sales projections, and you see you're spending more than you actually are bringing in, that's an obvious issue. I got to iterate that this process isn't just to make you feel warm and fuzzy inside. It's about having a truly good quality plan and not just inflating your profit numbers to make yourself feel good, but genuinely taking time to think and coming up with a reasonable budget or reasonable sales projections to see where will this lead you at the end of the year, or where will this take you at the end of the period? Will you actually be profitable? And if you aren't going to be, based on your projections, your budget, your forecast, then this is the time before the year starts, before the period starts, to make some tweaks to make sure that you're at least on the right path to begin. Lastly, share this with your team. You may want to show them only parts and bits and pieces of the budget, but give folks some expectations. Allow them to see, especially if you have someone else performing your purchasing decisions for you, or at least have a lot of input on it. Maybe you want them to know that you're trying to stick to a 45% cost, 55% markup on your pricing, so that they know what your target costs are going to be. And continue to review your budgets each month. Did you meet your budget? Review your actuals to the budget, to the plan, and to see where did things go off? Where did things diverge? And if it's for a good reason or a negative reason. Did you meet expectations? Did you exceed expectations? Did you keep your costs under control and within your budget? Did you overspend? And again, was it for a truly good reason? For example, was there a major repair? Was there a really good deal from a vendor, from a grower, where you could buy in bulk and then see those profit gains in the coming months? Or were you just mindlessly spending? As an owner and operator, it's really up to you to control and direct how the business is wisely spending its funds. But that's the great news. It's completely within your power to direct the business and how it runs and how you control its spending. So to recap, budgeting is a great tool to keep you from mindlessly spending or overspending. It's a tool to hold you and your team accountable, and it's a tool to alert you when prices are increasing over a given period of time. To utilize budgeting as a tool, first identify all of your areas of cost, then come up with a sales projection. Decide which method you're going to use for allocating the revenue and sales amounts to each cost area. For example, you can use last year's numbers, you can use last year's percentages, or you can do deep dive research. And that may be you having conversations with your vendors on if you can expect a price increase this year. Make sure your budget passes the sniff test. Is it realistic? Is this something that is actually reasonable and can show a profit? And then share with your team to hold them accountable. Thanks for joining us on another episode of High Profit. Stay tuned for next week, where we discuss navigating the cannabis industry tax challenges. Thanks for joining us on another episode of High Profits, the financial blueprint for cannabis dispensaries. We hope you found today's episode enlightening with some actionable steps to take away. Remember, we're here to answer your burning financial questions. So if you have any topics that you'd like us to explore or any questions that you'd like us to tackle, please reach out to us on our websites or on our socials at Equibis Accounting. Stay connected with us in between episodes by following us on LinkedIn at Equibis Accounting. We love engaging with our listeners and sharing additional resources and updates. Before we go, always keep in mind that financial success is within your reach. With the right knowledge, strategies, and a dash of determination, you can grow your business and thrive in this exciting, evolving field. Until next time, stay green, stay financially savvy, and continue unlocking the secrets to financial success in the world of cannabis finance.